So, hello everyone, my name is Harsh Gautam and I'm pursuing my PhD from Lexicon Mile. My specialization is in finance and currently I'm working with IDFC First Bank. So, friends, I will present one topic. My topic name is Understanding Banks and Loans, a comprehensive overview. So, friends, in this we will discuss about the banks in layman terms and we'll also discuss these things. About the various loans and also we'll discuss about the loan against property. So it will be very interesting journey. So stay connected with me and let's start. So let's see some functions of bank and what is bank. Bank is a lawful organization that accept deposits that can be withdrawn on demand. Banks are institutions that help the public in the management of their finances. So there are some important functions of banks. There are two types of functions of bank: primary functions and secondary functions. In primary, the two major primary functions are accepting the deposit and granting of loan and advances. So, friends, let's know what is accepting of the deposit. So, accepting of deposit means banks have saving deposit, fixed deposit, current deposit. These all things comes under the accepting of deposits. Now, let's see. Second primary function of banks, granting of loans and advances. Granting of loans and advances means bank gives facilities of bank overdraft, cash credits, loans, discounting, bill of exchange. So these are the main primary functions of banks. So now let's discuss about the secondary functions of bank. The secondary functions of banks are mainly agency function and the utility functions. Agency functions means transfer of funds, periodic collections, periodic payments, collections of checks, portfolio management. These all are comes under the secondary functions of bank. And utility functions include issuing letter of credit, dealing in foreign exchange currency. So these are the main functions of banks. Now more things we'll explore in later slides. So now let's discuss about banks can be classified into various types. So as you can see here, here are different types of banks: central bank, cooperative banks, commercial banks, regional rural banks, local area banks, specialized banks, small finance banks, and the payments bank. So let's see one by one what are their functions and what are their roles. So first let's talk about central bank. So central bank, which is responsible for implementing monetary policies. The central bank only make policies for all the banks, whether it is commercial, whether it is public sector bank, whether it is private sector bank, whether it is a small finance bank. So central bank make the policy. Central bank keep eye on all the banks, and all the banks have to comply the rules of central bank. So these are the main role of central bank. So let's see about the cooperative banks. Cooperative banks are the banks which are formed by the group of people to meet specific needs. So group of people, group of individuals together come, they deposit money, and if any member of that group is in need of that money, so they lend that money to that member. And so now let's see about the commercial bank. Commercial banks, as we know, friends, there are commercial banks which accept deposit withdrawals and provides n number of features. These are the commercial bank which are open for public. There are public sector commercial banks, there are the private sector commercial banks, and there are n number of commercial bank. For example, HDFC, Axis, IDFC First Bank, SBI, Punjab National Bank. These are the commercial banks which accept this deposit, which do withdrawals. So these are the main functions of commercial banks. So now let's see regional rural banks. See, regional rural banks are the banks which are backed by the government, and these banks are mainly in the rural areas where the public sector banks and the private sector banks doesn't operate. It works on the ground level. It works on the ground level. Regional rural banks. So, the main point I want to discuss in regional rural banks is they have been created with a view of serving primarily the rural areas of India with basic banking and financial services. So, this is all about regional rural banks. So now let's see about the specialized banks. So specialized banks are the banks which provide loans for the specific sector only. Suppose there are some banks or NBFC, we can say they provide loans for the cottage industry only. Suppose the person who has cottage industry, cotton industry, and he want loan about that industry, so he will go to that specialized bank. Suppose someone is working in uh, FMCG sector. So some specialized banks are there which only finance for the FMCG products only. So these are the main functions of specialized banks. So now let's see about the small finance banks. See, friends, small finance banks is also is operating like similar other banks only, but only the main difference between the small finance bank and more commercial or private banks is small finance banks focuses on micro enterprises. Suppose they have they give loan to the people in rural areas. They have small ticket size. They can't finance loan bigger than for 1 crore or 50 lakhs. It depends upon the bank. So it also accept deposit, it also do withdrawals, it also provides a number of services which are provided by the other commercial or private banks. So only the ticket size is low. This is the only main difference between the other banks and the small finance bank. So now let's see about the payments bank. Payments banks are the banks which doesn't provide loans or credit facility. See, like in other banks, private sector or commercial bank, they provide loans and credit facility. But in payments bank, they do not provide the loans and credit facility. The customer can keep only up to maximum amount up to 1 lakh. So these are the main features of banks, and the banks can be classified into these types. Yeah, friends. Now let's see what are private sector banks. Private sector banks whose stakes are held by the private companies. So, um, in comparison with the public sector banks, like we see, well, like we know in public sector bank, more than 50% stake is with government. But it is just opposite in the case of private sector banks. The most of the stake is with the private companies, and uh, there are some benefits of private sector banks. In previous videos, we have seen that benefits of public sector, and now in in this video, we'll see the some benefits of private sector banks. Offers quick services to customers, offers customized services according to the financial needs, quick financial decision making, have a streamlined management system. See, the private sector banks have runs only and only on service and performance. When when the public sector banks will start performing and they will deliver services on time, uh, the private sector banks will survive. These private sector banks grew and expanding in a huge manner because the services provided by the public sector banks is very slow. So these are the main difference between public sector banks and private sector banks. There is one more difference I want to I want to discuss is the when public sector banks are formed. So the that bill is introduced in the parliament. Then only the public sector banks are formed. But in case of private sector banks, it is registered under the Indian Companies Act, and the bank is opened. But both banks follow the RBI guidelines ultimately. So these are the mainly. So this is all about private sector banks. Yeah, now we'll see public sector banks. What are public sector banks? As you can see, friends, public sector banks are the banks whose majority of the stakes are held by the state or central government. So these banks are mainly backed by the government, and the government is responsible for formulating all the financial guidelines for these banks. These banks work under the government, and thus they are trustworthy. So this is the main points to remember. These banks are work under the government, They are more trustworthy. It doesn't mean private banks are not trustworthy. Private banks are also trustworthy, but it is a government backed. These banks are government backed. That's why it is more trustworthy. Public sector banks work for the benefit of people. It is very true. Uh, People, by introducing new schemes from time to time, it also charge less for their services. The charge on loans are also less as compared to private sector banks. This is also correct. The biggest public sector bank in India is the State Bank of India. See, one thing I want to focus in this. See, I am also working in bank. I am working in private bank. Then also we do more number of loans in as compared to public banks. The reason is that public bank provide less number of less interest rate. We provide more interest rate as compared to public sector bank. But then also people come to us because there are flaws in public sector banks. The process is very slow. uh, the process is very slow. That's why people prefer private sector banks. Although it is backed by government, but then also people prefer private sector banks. So let's see some advantages of the public sector banks. Low interest charge on loans, high interest rate on deposits, through full job security for employees. Yeah, this point I can relate much, because see, in private sector we employee have to perform. When they stop performing, simply company will kick out from the organization. But there is more job security in public sector banks as compared to private banks. Offer its services to large customer base, offer financial services through multiple branches, offer its services to the rural areas too. Yeah, this is the main this point is also very crucial point. See, whenever the private banks open in any area, they see who are the potential customer, whether we will get the saving accounts or not, whether we will get the current account or not, whether we will get the deposit or not. First they see profit. But public sector banks, they don't see profit. They also work for the improvement of the people. So that's why these are the some differences between public sector banks and private banks. So friends, now let's see how many different types of bank loans in India. As we can see, there are many bank loans like secured loans, unsecured loans, home loans, gold loans, vehicle loans, loan against property. So let's see what is this types of loans. Secured loans means we keep some collaterals. Suppose I am giving you 1 lakh rupees, and you are giving me your house property paper. So house is you are keeping as a collateral to me. Whenever you will pay back 1 lakh rupees to me, I will return you the house, your property papers. So these are the secured loans. And there are also some types of secure unsecured loans. Unsecured loans means, suppose you are taking some money for your business purpose. So I have seen your business. I thought that, yeah, bank thought that your business is growing and you are performing well. I will not take any collaterals and I will lend you the money. So these are the unsecured loans. Means we banks doesn't have any type of collaterals. Home loans, as you know, know friends, name itself is explanatory. Home loans are the loans when we purchase homes. We take loan from banks and we keep collaterals as a paper of that home. These are home loans. Gold loans, we keep collateral as a gold, and we take money from banks. And vehicle loans, loan against property. So these are the few types of mainly few types of loans which are trending, and people need time to time. So friends, now let's discuss about these types of loans, like loan against property. It is very close to me, because I'm working in loan against property. So after COVID, these types of loans had increased. And when I'm joining the company, and I was searching for loan against property, I was not getting any such type of material, that what is actually loan against property, what sales manager has to do in this profile, So I was getting very less content, and when I joined the bank, so I was facing too much difficulty. So actually, what to do here, uh, how to process the loan applications. So I have faced too much difficulties, but I'm making this video to my friends who wants to work in this domain, loan against property. See, the loan against property is when you borrow money from a bank or financial institutions using property as collateral. It is very simple. So you can see, for the explanation, kindly read these topics: using your property, borrowing money, interest and repayment, keeping you using your property. So as a sales manager, my work is to source the file from the channels. There are different channels. We have to go there. We have to convince the channel partners that we will provide so and so interested, we will provide you best service. So we bring that file from channel partners, we log in here, and we see check the credit worthiness of that person. We check the civil report, we check the financials, we check the KYCs, we check the property papers thoroughly. We have to check the check all the documents of the customer. And there are various programs where we have to fit that file. So talking about after login, there is separate credit team which check the credit worthiness of that person. Then we together with the sales team and credit team, we together have a joint visit at the customer home. We understand, we talk with the customer, we understand why he need the money, what will he do with the money. So these are the processes. After when credit team is satisfied with that person, then credit team is satisfied with the business, and when we see that this business is growing, then we sanction the loan amount to that person. So in short, basically, in summary, I want to say this is a very um, broad area. We can say there is enough thing to learn. All files are different. Every people have different business. So you have to keep knowledge of technical, you have to have knowledge of legal, you have to you should know how to read property papers, you should know how to read ITR in computation, so you should know how to read financials. So it is a mix of everything. When I joined the company, when I joined the bank, I was facing too much issues. I don't know how to read the legal report, I don't know how to read the valuation report, I don't know how to read the financials. I was finance student. Sorry to say, I know to read financials, but there are many small things I was not aware of that. So friends, if you want to join this organization, or you want to join this field, loan against property, you should first understand the legal report. You should know about the valuation report. You should know about the financial terms. So then only you can exceed in this field. There is too much to learn. So that's all about loan against property.